Hi, this is Suresh Vijan. Welcome to my channel Trade to Gain. Today we will be discussing a very interesting topic, how to make money in option trading. There is a saying in stock market 90% of the traders lose money. So important point here is if we have to be successful in trading and make money in trading, we have to be in the 10% club and we should avoid mistakes made by most traders. Request you to please watch the video till the end, and if you like the content, please subscribe my channel, like and share the video. Relevant audience for this video is beginners in option trade and regular option traders. First, let us see what are the few common mistakes made by traders because of which they lose money. Mistake number 1. Make easy and fast money. Always treat option trading as a business with reasonable returns of 24% to 36% per annum. Not as gambling taking high risk for high returns. Return of 24% per annum compounding can double your trading capital in 3 years. Example, if you invest rupees 4,000 to make quick double or triple profit or even more, it is just taking chance or like winning a lottery. It is always better to invest rupees 2 lakhs and make rupees 4,000 to rupees 6,000 consistently. Mistake number 2, buying cheap out of the money options. In buying cheap out of the money options, probability of success is very low, although seems very attractive because of cheap price. Options are depreciating assets. Option premiums melt very fast every day. Example, if Nifty spot is trading around 14,600, buying 15,600, 15,800 out of the money call option, 1,200 points far for rupees 9 or rupees 7, which is most likely can become zero on expiry. Mistake number 3, no exit plan. Not all trades can be 100% successful. Always have a proper exit plan. Proper stop loss and target before taking the trade. Example, if target profit is rupees 6,000, your stop loss should be rupees 2,000 or rupees 3,000. For success in trading, always maintain proper risk-reward ratio of 1:3 or 1:2. This way, if our win ratio is less than 50%, then also we can make a decent profit. Mistake number 4, trading in illiquid options. This is common in stock options, difficult to exit. Always it is better to trade in liquid index options, Nifty or Bank Nifty, or liquid stock options. By this, we can avoid slippages and have an easy exit. Example, stock call option, bid rupees 5 and ask rupees 10. It is very difficult to exit. You may have to wait till expiry to exit. Mistake number 5, ignoring implied volatility. Implied volatility is often ignored, but it is one of the most important parameters in option trading. Chances of having no profit if we ignore implied volatility. Common rule is sell high implied volatility and buy low implied volatility. Example, if India wicks above 30, avoid trading selling strategies as it can become high risk trade. Mistake number 6, no adjustment plan. Markets are always irrational, can give sudden up move or down move. Saving capital is always better than no profit. Always should have proper adjustment plan. When to adjust and how to adjust trade if market not in our favor. Example, bull call spread. We are taking a bullish view. If instead of market rising, market falls. Here important point is when and how to adjust your trade and try to exit at break-even point or take minimum loss. Mistake number 7, position size. Most traders lose money because they don't want to lose money, often involved in revenge trading. Position size is very important. Never risk more than 1% or 2% of your total trading capital per trade. Example, if your trading capital is rupees 5 lakhs, not to risk more than 5,000 to 10,000 per trade. Always maintain a proper trade journal. Now back to the title of our video, how to make money in option trading. If we try and avoid these 7 mistakes, we can increase our success ratio and probability to make consistent profits and make money in option tradings. Happy learning. Hope you liked the video. Please like, share and comment on the video. Don't forget to subscribe and click on the bell icon. Thank you.